What's up YouTube, it's Louis here bringing you today's cryptocurrency video. Wow, we had some amazing news from the Fed and that's what invalidated loads of bearish patterns. Of course yesterday I was bearish, I'm going to admit that, but without that news event we would have quite carried on down. You can see we were down here at the first day when the day opened, and yesterday when the daily candle closed we closed back above the descending triangle. So before that news event it was silly in saying I'm bullish when you're in bearish technical targets to this target down here at 20 cents. But guys, the Fed news invalidated that. Just because we're in technical targets to the downside, if a news event comes in and flips it bullish, it becomes bullish. Without that news event, we would have been bearish, and that's why I had bearish sentiment when I brought out the video. I was getting a lot of trolls yesterday saying, oh, that aged well, you don't know what you're talking about. But guys, you know I'm not bullish, I'm not bearish, I say what I see. And yesterday, before the news event, we were down here. I think I made my video in and around here on this red candle. You're below the descending triangle support, so that means we're going to come down to this technical target at 20 cents. I also showed you how the 1618 was sitting there. But anything can get invalidated. Breaking back above this descending triangle's support, or this neckline, will invalidate further downside. And that's what we did by the Fed news. Just before the Fed news, we were down here. So it would make sense to be bearish because you're below the trend line, you're below the neckline, and so you're putting in lower lows, lower highs, so you're going to go to this technical target. But the Fed news changed that, and so that's why we need to go back into bull mode. And so we need to find key areas of support to hold to basically validate that we're going to keep going up. So I'm going to measure from this swing high to the swing low. You can see that we're nicely sitting on that 618. If we were to roll over more, I would like to see the 050 and the 382 at most to hold up. If we do lose that 382, that's when we basically validate the descending triangle's target, and your target would be 20 cents. But until then, I'm not seeing that anymore unless another fundamental news event. We can't call these fundamental news events. You know what I mean? We were down here. Imagine if the Fed said, yes, we're increasing interest rates. Yes, we're not going to print anymore. That would have sent us crashing. But you can't predict a news event, so we need to wait for it. And then we got the bullish news. Interest rates are staying the same until March, or potentially push back to May, which just means that we're going to get our extended bull run. It doesn't mean that we're going to go up to crazy prices. It just means that we're going to break out of this consolidation period and then carry on. It's not crazy bullish news because obviously we're expecting it to go up anyway eventually, but it just basically is a confirmation that it's going to prolong the bull run. Doesn't mean it's going to send it to crazy higher prices. We still got the same targets. It just means that we got more time to eventually go and meet those targets basically. So without that fundamental news, we would have carried on rolling over. So as long as we can maybe fall back to the EMAs, confirm them as support, then we will have a technical target sitting at the 1618 at 36 cents basically for HBAR. We do have this double bottom here, which was formed by the news, because obviously look, it came down, broke straight back up, meaning that was a fake out to the downside. So we've broken this neckline now. Potentially we've met the target already. Let's just double check that. Yeah, so I think we've met the double bottoms target. Yes, correct. And so now we need to wait for a new target, a new pattern to form. This could be a bull pennant, so that would be a bullish continuation pattern. You would measure the push into it and then put that on the breakout. And so look at that, your technical target would be at the 200 EMA, where of course you can get rejected. If you were to get up here, I would expect a pullback, maybe to sit on these swing highs over here, any of these swing highs, worst case back down to here. But as long as you're above this golden pocket, the 0618 to the 050, you're going to continue to that 1618. So I hope you understood that video. Lose the neckline of the descending triangle, validates this. Break back above it, invalidates this. Trading is all about invalidations, okay? So I hope you enjoyed this video. I'll catch you in the next one. And as always, peace.